And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And good morning and welcome to the Market Forecast. Happy Monday. I'm John Hoagland. Thanks for trusting me with your time. It is August the 23rd. I hope you had a good, restful, and fun weekend. We're just starting our first page of this chapter of this week of this year's book of trading. So we're really just kind of getting into it. You guys have heard me say it before. I'm a slow starter. I usually don't do too much early on Mondays. This morning is maybe a little bit of a different situation, but we'll see that in the chart shortly. As far as economic numbers this morning, we're looking at PMI flash at 8:45 Central this morning. That's a preliminary number. 9 o'clock existing home sales. As far as for the week, we are looking at no Fed speakers because this week is the Jackson Hole Symposium. No talking Feds until Jerome Powell speaks on Friday at 10 a.m. Eastern, 9 Central. Tomorrow we're looking at new home sales. Wednesday, durable goods orders, and of course, crude numbers. GDP on Thursday with jobless claims and nat gas, and then Friday we'll just be waiting probably for the Fed chair to speak again at 10 a.m. Eastern, 9 Central. As far as what we're doing here, we are looking for accurate context, good risk management, and excellent patience. As far as everything else that's gone on over the weekend, I mean, we're all well aware of what's going on in Afghanistan. We're all well aware of what they're going through in Haiti. And hopefully we've all remembered to think about them and send some prayers all their way. Those that are not where they want to be, may they find their way home, of course. As far as other things, Yellen is packed Chairman Powell for another term at Federal Reserve Chairman. Their Fed's annual Jackson Hole Symposium begins this week, and as the week goes on, we'll look for more perhaps hints about the phasing out of the bond buybacks. Crude oil got a nice little bid last night after China announced no community new transmission of COVID. So maybe that's a good thing. And as far as everything else, we're going to remember to like that lucky like button, hit that lucky like button, share, comment, question, feedback, and heckling are always welcome. Of course, make sure you subscribe to our YouTube channel so you can know when we do go live. As far as the VIX is concerned, down below 20 again at 1844 last I just checked. Dollar index 93.18, off a little bit off the highs that we saw it on Friday. And the 10-year yield really kind of holding steady, 1.27, 1.26, 1.27, 1.26. So really just kind of hanging in there. The group coaching Wednesday, here is the link. Make sure that you sign up and get your seat. Some really good questions last week from Fred and everybody else that was there. You know, even if you don't have questions, sometimes going to these things can raise some questions, and there may be questions that somebody else asks that you hadn't thought of yet. And so this is a really good way to kind of spend an hour traders talking to traders, and I look forward to seeing you there. Got to say good morning to everyone. Bill Phillips, first in the room, you win the prize. Jim, Drew, good morning. Brian Ednelson. Joseph, stacking bananas. Let's stack some bananas. That's right. Drones over Texas. Good morning, Daniel, James, Andres, Andre, I think it's probably Andre. Caesar, Zurain, Ryan. Let's have a great day. Of course, Laura, good morning. Drones over Texas. I don't even know if you could see. I did have the wrong stream at first there, but I always try and check that, and once in a while I miss. But thanks for pointing that out. Tone, Kevin, and we are live. JB, Nico, George, NM, Greg H, Jay Gilmo, good morning. Rob T, systems analyst, good morning. New week, new opportunities, absolutely. Fred, crude oil has opened above Friday's late spike. Overall inventory is long and the ES gapped higher. However, I am not going to get chopped up in this Monday like I got chopped up last Monday. Well, we'll take a look at that and see what we're looking at here, Fred, in just a couple of minutes. Keith, good morning. Vince, or Gold Morning. Yes, Gold Morning was a good opening range trade, Vince. I'm hoping you jumped on it. We're going to see how it's playing out now, but what are your thoughts on NQ this week? Well, we're going to take a look. Nelson, and you're good like that. Drones, yes. I always like my hecklers. Alberto and Khalid. Good to see everyone this morning. All right, so let's get things set up here so we can take a look at what's going on in our markets. And we're off. All right, here's the daily in crude. Not because it's my favorite or anything, just because we go left to right on the charts. Here's the daily. We had volume drop pretty good on Friday on this push to the downside. We also lost 14,000 in open interest, and that may just be also related to rollover, which Friday was the final trading day for the September contract. We don't have to worry about that anymore. We can now count on a little bit more clear volume and open interest information for the next 3 weeks. So pretty good stab to the downside, about 8% of loss in crude pricing last week alone. We have new information, apparently. The Chinese have said that their COVID infection is not as bad, so maybe that's going to bring a little bit more demand into the market, and has found a bid for the S&Ps or for the crude oil, I should say. Expiration is this week, but we're not going to worry about that because we're not going to be going down to zero, and apparently, like we did in the last May's expiration. As far as where we're looking at here, I'm not seeing that this was necessarily a late spike to the downside, although it may look like it a little bit on the profiles, because we did close pretty close to that bottom. Settlement was 62.14 right here, and basically since we closed and since we've reopened this Sunday night, we've had some considerable buying coming into this market. Now, the CFTC commitments of traders has the lowest number of speculators in crude oil for like the last couple of months. So it seems as though there is some money out there ready to come back into the marketplace. So we're going to be looking at basically just gap rules. I mean, we know we've got a lot of new longs here, and those new longs may be right. Maybe. We have to see. What are we looking at? We got a naked point of control all the way up here around 65.55. We've got our weekly kickoff high at 68.60, weekly kickoff low at 60.70. We've got some space here. Let's take a look back at that daily chart here. So there is a lot of space. This was a pretty dramatic drop in pricing, and if something has changed, there is going to be that much space left to the upside, perhaps. So, Fred, I would say let's watch that opening range. The opening range has already paid in the crude oil and in the euro, at least last time I checked. We're going to, of course, see those. I know that you were asking about these three highs here. What's it look like here? We've got these three highs right here. It wasn't a weak high overall, but these weak highs here have really kind of brought a support level once we got above them. So, these internal weak highs in the profiles and on the charts certainly can be, telling of longer term direction. It looks like this auction was having a hard time completing up at this level. We closed lower, but ever since the close, we've been basically moving higher. So I'm going to be using, we're already in the regular trading hours. Can't see if the opening range is the high or the low. If it was, it's a pretty substantial one. It looks like it did not hold though. But as long as we continue to see buying coming in the regular trading hours, that may indicate longer time frame buyers. Fred, watch the delta. If the delta is negative and increasing in negativity as price moves higher, that may indicate longer, stronger buyers, and we're going to see our shorter time frame shorts dig their heels into the dirt and try and push this thing higher, and they may get the help for it. S&Ps. Last week, we had another reminder, yet another one, like we need another reminder of how resilient these markets really are. 21 days, about 23 days from this low to this low, and now it looks like we are just going to head right back into eating shorts to the upside. Political uncertainties are mounting. This may become an issue. This market is likely to be pretty headline dependent or sensitive, if you will. Look at the volume we had on Friday on the way up. Very low volume. Even in New York, it was pretty low. We lost 8,300 in open interest on this up move, so it wasn't like there was a lot of money coming into the long side here. It was more of shorts just trying to get out as they continued to get squeezed, which is what this market does. It was just last week that we put in the high. We came off pretty hard. It looks like we're headed back towards the high. What are we looking at on the 30-minute chart here, so we can get an idea of what to look for this morning? So settlement is down here, 44.37. I want to put that in my charts because it can be important, especially when we have some overnight inventory that's kind of holding positions on the long side. Overnight inventory is just, where was settlement? Where did our overnight traders take price? Our overnight traders took price higher. They're probably holding some long positions. It's creating a gap. And when we open with a gap from Friday's regular trading hour session to today's regular trading hour session, it gives us an opportunity. If we can't close the gap relatively early in this session, relatively early I understand is a subjective term, but if we can't close the gap, then there's only one thing left to do. It's going to be ranging or continuation to the upside. Not being able to close the gap has us looking for longs throughout the day today. Boy, it was a rough week last week. We had a late spike that we opened below that didn't necessarily pay us. We got too short down here. We brought price back up into the late spike. Once we've accepted back above the base of the late spike, which we did here, now it looks like we've rejected that lower pricing, and we are seeking prices at higher levels. So, yes, Mike, you got to love that endless bid. Now, Delta. NM. Delta is not the same as in options. Delta is quite simply how many more contracts trade on the bid minus how many contracts trade on the offer, I should say, minus the number of contracts that trade on the bid. on TS Trader. You can see it here. It's probably not going to be very helpful for us here, but so here's Friday. Here's what Delta did. So we went from, negative 27,886, and while price was being pushed higher, so was Delta. This is, you would say that it would make sense that if Delta was decreasing in negativity or increasing in positivity, those are market orders buying offers. It would make sense that price would go in that direction. But sometimes we will find that the price can move opposite the delta, indicating a potential longer time frame traders. Ryan, yes. Longer time frame buyers. Okay? All right, excellent. So let's move on now to the Nasdaq. Nasdaq really recovered nicely. It is, right up at last week's high. We've got a little space here to the left to reach the all-time high. The volume, again, a little bit suspect on this move to the upside. We at least added 1,100 in open interest on this upside move, indicating money coming into the long side. Is that a good thing or is that a bad thing? Well, we're opening with a gap again. We've got the all-time high in sight. Last week's high has already been part of the equation for today. Take a look at the 30-minute chart. So here's last week's high. We are going to, with pretty decent probability, be opening with a gap. We've only got about 13 minutes before the open. Looks like that's going to happen. Settlement is right here, 15,086 and 75. So 15,086.75 is settlement. Put that on your charts. Pretty decent upside move on Friday, continuing last night. We do have some overnight longs. We do have gap opening. Watch this. Last week's high is going to be somewhat pivotal for us this morning, I would say. And then, of course, we got weekly kickoff high, which is the all-time high, which may be something attainable today, especially if we cannot close the gap. What do you have? This is a good question. The relatively quickly. Well, when you think about, what happens to us when we have a position on, time seems to stop. And, for us to be thinking about what's relatively quickly in market time, it's, again, very subjective. Sometimes what I'll look for, Ryan, is if we get a push back towards settlement relatively early in the session in the first hour or two and we can't get there, the next time we get down to that level might be an interesting area to limit the risk. Yeah, no, relatively quickly. Yeah, it's very subjective. Sometimes we can say have the market move higher for the better part of the session and then finally have a gap close. There's no right or wrong way to do it. There's nothing that's going to tell you 100% if we're accepting a price higher than the previous level at 100% accuracy. Okay? Yeah, sometimes. Sometimes time will stop. Yep, we're all human beings, and when we have risk on, that discomfort seems to slow time, right? All right, let's take a look at gold now. So we have a situation, we have five very narrow ranges. Very narrow range for the week last week. The pink lines here are the range for the week. 1, 2, 3, 4, 5. Here, it's down here. There we go. So thinking that these are going to be somewhat pivotal for us this morning. Yeah, well, there seems to be the way. We added 3,700 in open interest on Friday with no real activity, no real direction, no real directional activity, and we've been adding open interest. So we were saying, I think Thursday and Friday last week, that this market is suspect. There is something in it that is about to happen, and this may be the beginning of it. Open interest just continues to grow. I mean, the levels that I was looking at this morning at 6:30, kind of looking at these charts were last week's high and last week's low. Well, what did it do today? Here is last week's high. The market has opened. It opened with a gap. 7:20 is the opening time, and the opening range is the low of the regular trading hours session, 1793.50, and it was a pretty small opening range too. So that made it really, enticing to just take it and get into it and take the risk on it. If you did that, I mean, you're really looking at a 1,000 points, $1,000 per contract move here so far, because we're up $13 from where we opened. Okay, this is what I mean when I say that this market is suspect. Something is changing, and we'd better be ready for it. If we're not in this, it's going to be hard to catch. As far as kind of target areas for this, I mean, weekly kickoff high is right here, 1807. This is also a pivotal level. Where did it trade to? 1807.30. So this is also a pivotal level for us here. This would be a decent profit target off that opening range trade, which is now 93, 94. Here's 1803. That's $1,000. Now we got another little bit there. Interesting. All right, so let's go to the euro and get through the 10-year, and we'll be ready for business. Euro, similar situation, just a little bit different. There was a little bit of uncoupling of the euro and gold last week, but it seems to be straightening itself out. Downside structure for the time being seems to be kind of slowing volume. Okay, that's not healthy for a downside auction. We want to see more volume to see the downside auction continuing. So we're headed towards weekly kickoff high, which is 117.40. It's pretty tight this week because I think, this is going to be an area where we may start to see some longer time frame adjust inventory. We had a 5,600 contract increase in open interest on Friday. It was on lower volume, but it was overlapping to lower range-wise. The market was still attempting to move lower, but really did a poor job of it on Friday. And now we see today that the market is continuing to the upside. What did we look at this morning? We looked at a gap. We looked at a small opening range, and we see the market testing weekly kickoff high as we speak. So there's a lot of similarities there between the euro and gold. Gap, opening range, up at weekly kickoff resistance level. Interesting opportunities early in the session this morning. And the 10-year. We've got last week's range was very tight, very indecisive, very short time frame controlled. So, I mean, I've had to tighten up the weekly kickoff levels to basically last week's high and low because there's been very little, little activity, none outside that last week. And we see volume kind of maintaining. We added 6,300 in open interest on Friday. So there's, a little bit of open interest came in on Friday. Our overnight, session checked down to weekly kickoff low, which is 133.29, basically within a tick of it. Let's take a look at the 30-minute. So there's our low. We did open with a gap. We've closed the gap. We find acceptance inside value from Friday. In other words, another subjective term. What is acceptance? Acceptance is time, volume, momentum. Sometimes it takes a little while for acceptance to occur, but if it does, because we opened outside of range and outside of value, there's a good probability that price could rotate all the way back to the high of value from Friday at some point in today's session. That is, again, upon acceptance, another subjective term. Upon acceptance of value, there's a probability it'll reach the other extreme of value at some point in the session. All right. So, it's only Monday. I got to remind myself of that. Pretty decent opportunities already here this morning for a Monday. So I'm optimistic for a interesting and challenging trading week, as they always are. I'm going to take my deep breath. Stay humble, grateful, and creative today. It's only Monday. Got all week. I'm going to let the market come to me. Not going to be chasing for opportunities. I'm not going to be chasing for trades. If I go looking for trades, I'll find enough of them to have a bad day. So stay calm, cool, collected. Get out there and profit. We're going to. I guess we're in pretty good shape here. We got about 4 minutes, so prepare yourselves. Get out there and profit. Trade well today.